Hello and welcome to Business Morning. I am Bisi Adebayo. We'll begin the program with an appeal by the federal government to Nigerians in the diaspora for more input as part of efforts to attain macroeconomic stability using the medium-term expenditure framework. The Minister of State for Budget and National Planning, Mr. Clem Agba, who was speaking at a virtual meeting with Nigerians in the diaspora, highlights ongoing efforts by the government to improve infrastructure, communication, and the industrial sectors for the economic development of the country. All right, now the Lagos Chamber of Commerce and Industry says it's worried about the negative impact of the EndSARS protests nationwide, stating that the economy has suffered an estimated 700 billion naira loss since the protests started 12 days ago. A statement by the LCCI President Toki Magboguje appreciates the level of engagement by Nigerians, adding that it's in line with the democratic norms for good governance. The LCCI boss notes that the protest has achieved some significant results while urging the protesters to take it a step further through dialogue with the authorities. Mrs. Magboguje says the next phase is necessary to reduce the disruptions around major cities, which has come at a great cost to the economy and the welfare of Nigerians. On several projects to boost its digital economy drive. Recently, 5 more digital economy projects were inaugurated in the country with the aim of diversifying the nation's economy from a natural resources economy to a knowledge-based economy. Digital literacy and skill sets of youths in the country have been at the forefront burner due to the human capital potentials on the economy. Well, joining me now to talk more on what the youth can do to support the call for a functional digital economy in line with ongoing protests for change is the immediate past president of the Institute of Software Practitioners of Nigeria, Dr. Yele Okeremi. Good morning, Dr. Okeremi. Thank you for joining us on the program. Now, the digital economy sector seems to be gaining ground, especially with the pronouncement of the Minister for Communications and Digital Economy for a Digital Economy Day. What are your expectations for making digital economy a major contributor to the country's GDP?
Well, good morning, BC. I hope you can hear me.
Very well. Please go ahead.
I'm having some challenges hearing you.
All right. So I just asked if you can hear me now.
Well, true.
Okay.
The digital economy is I would say, imagine. Hello.
Go ahead, Dr. Okeremi. We can hear you.
Hello, BC. Can you hear me?
We can hear you. Please go ahead.
Okay, lovely. So, well, digital economy is actually emerging. Good. The digital economy is emerging, I would say, one of the sectors of the economy that's gradually developing and seems to be doing well today. And yes, recently, just like you said, a Digital Economy Day has been approved by the Federal Executive Council just to begin to talk more about this digital economy and its contributions to the economy of, or to the GDP of Nigeria. Now, if you take a look at the possibilities in the digital economy, it's very, very wide. Actually, if you take a look at some other countries and you take a look at some global players in very many sectors, they themselves see themselves as tech players. So when you see car manufacturing, telling you that they are a tech company. Now, if you listen to the pronouncements of the Israeli Prime Minister some time ago, about a year or two ago, and he was talking about the entire economy of Israel, you would see that this entire economy of Israel is predicated almost completely on tech. He spoke about so many of the tech companies in the world, all the global players, pretty much all the global players in the world have some research lab or the other in Israel. But much more importantly, one of the things that he said that I think is very worthy of note, particularly for countries like Nigeria, where we are agrarian in nature, is that their agriculture in Israel is tech completely, because now they are able to use technology to determine how every plant at crop level, at plant level, they are able to
Dr.
see.
Kermi, I do apologize. I'd have to interrupt you at this point. We need to touch up a bit on your audio there, so we'll be getting back to you in just a moment. But earlier on now, we mentioned to you that the federal government is making an appeal to Nigerians in the diaspora for more input as part of effort for the country to attain macroeconomic stability. Now, let's get to hear from the Minister of State for Budget and National Planning, Mr. Clem Agba, who spoke at a virtual meeting with the Nigerians in the diaspora. Take a listen.
Not only dealing on digital economy, but also on bioeconomy, science, and technology. And we have brought in various sector experts in this area to put together a plan on how to provide the basic infrastructure that is required to ensure that communication is not only easy or efficient, but that it is inexpensive. But we are very, very willing to get your thoughts, your ideas on how you think this can be done, and we will send it to the technical working group.
All right, let's talk about the crude oil markets now. And prices are down for a fourth straight day today as worries about a resurgence of coronavirus cases globally continues to stifle recovery in fuel demand. Brent crude futures were down 0.47% to $42.42 a barrel, and that was in early trade. And U.S. WTI crude futures were also down 0.17% to $40.76 a barrel. Meanwhile, Libya is rapidly ramping up production after armed conflict shut almost all of the country's output in January. Industry sources say output from the biggest field, Charara, which reopened on October the 11th, is now at around 150,000 barrels per day, or about half its capacity. All right, let's continue our conversation now, talking about Nigeria's digital economy. And the immediate past president of the Institute of Software Practitioners of Nigeria, Dr. Yele Okiremi, is back with us to continue the conversation. Dr. Okiremi, thank you for sticking around. We hope that the audio is much better now. So let's talk about the recent protest. That's talking about the NSAS protests going on. Of course, this is a burning issue currently. What's your take on the situation with the Nigerian youth as it relates to productivity, especially in the digital field?
Well, talking about the NSAS protest and what we see, we can see that, I mean, there was one program some time ago, I don't know how recent, I happened to see the video, and I think it was organized by the Central Bank of Nigeria. And Atedo Peterside made some very interesting statements. And one of the things he said was that so many things in Nigeria is rigged against the youth. And so the youth have to find means of expressing themselves. And these things that we are beginning to see are just part of these expressions. Ordinarily speaking, the youth of every nation should be the strength of the nation. But we have a situation where day in, day out, our own youth as a people have been disenfranchised. Their capacity to contribute to anything in the economy is very limited. And so they have to find a means of expressing themselves. And so in this regard, I really do stand with them in expressing the displeasure over the way the country has been run. Having said that, if you take a look at tech and creativity particularly, you will realize that, ordinarily speaking, it is a game of young people. I say this because in my own heydays as a young engineer, I remember that I have had to stay awake for 72 hours without 1 second of sleep because we needed to come up with a solution within that weekend. At this age of mine, I doubt if I can stay for 48 hours without breaking down. So you see that, ordinarily speaking, technology is a game that should recognize and encourage youth. And if you look at how other countries are doing this, they are catching them young, right from even elementary school. They are beginning to teach them the principles of doing technology, of coding, of doing software. We are still very dependent on natural resources. And so we are still virtually seeking rent in everything we do. Now, this is a very big challenge, because what's going to happen is that we now have a trap line of people, and I heard the young people say this on your station yesterday. And one of the things they said was that we have people who have been in the leadership of this country for the past 60 years, and they're still there. So they have created a trap line. We are not allowing people coming behind them to ever get there. And so we need to have a means of ensuring that it doesn't matter what your age is, you will be able to connect to the national productivity. You will be able to contribute easily. And I say this without any form of equivocation. Technology is one of the easiest ways, because it's a game of how productive you are. And the internet today has made it very possible for us. Pretty much anybody can do anything from Nigeria and can be recognized and can be used worldwide. So I will say that it's not too late. We missed the bus, the first industrial revolution, the second, the third. The fourth has started, but the bus, we can still catch with the bus if we are really smart about it. I want to say that it's time for us to press the reset button, and it's very important.
Now, perhaps some youth are actually changing the narrative. You talked about recognition just now. And of course, remember that recently a Nigerian tech startup, Paystack, was acquired by a U.S. company, Stack, for $200 million. What's your opinion of this, particularly as it relates to the future of young Nigerians?
Now, that's very interesting. That's very, very sound. That's a very, very interesting aspect of the conversation. So it shows something, that this company is owned or started by young Nigerians, and they've been able to create a company that at least the world attributes value to. The world attributes today that the company is worth $200 million. Now take a look at traditional companies. So many companies have been alive for so many years. How much is the value? This speaks to some of the things I'm talking about the fact that if we are smart as a nation, we really need to begin to pay attention to what is important and leave out what is not important. So you see that Paystack, within the space of maybe 10 years or less than that by far, have created value, $200 million. That's a very positive thing. Now, let me tell you the implication of that. So it tells us, particularly in the tech community, and even generally speaking in business, that it is possible to exit. Now, one of the things we were not trained generally as Black people is the actual essence of starting business. If you interviewed so many people, particularly those who didn't go to business school, that why did you start your business? They're going to give you a lot of reasons why they started their business, ranging from the fact that it is their passion, to the fact that they want to become rich, to the fact that they think it's going to contribute something to their community and stuff like that. Now, those are all valid reasons for starting businesses. But I want to say, as somebody that understands business, that actually the only reason why anybody will start a business is to sell the business. And people do not understand it. So around here, we think that, oh, when I die, then my children will take over the business. Even when you do that, you have sold the business. Only that the price that you have earned for selling the business might be your ego or some sort of satisfaction. But if you take a look at this, everything can be monetized. The Paystack transaction shows that any business can be created, can be added value to, and then can be sold, and the entrepreneurs can be happy. Having said that, this is brilliant, and this is excellent for the entrepreneurs. But I want to say that there's a caution, a note of caution to the government and to the community. We need to understand that we need to begin to encourage our local investors to know that the cheese has moved away from brick and mortar to money coming out of the ground, to money coming out of the heads of people who are smart. And we need to encourage local investors to begin to look at the tech sector. Because you see, ordinarily speaking, you do not also want to allow foreigners to control your critical sectors. And I guarantee you, as things are going today, the tech sector is going to become one of the most critical sectors to this nation, the economy, and even our society.
So what do you think the country must do to encourage the development of creativity and value in the tech space?
So it's easy. It's about following the money. So first of all, we need to set examples. Look, like the Paystack that you just mentioned is a very good example. It shows that if you are young, you are smart, and you are tenacious enough, you can create something that can guarantee you comfort for the rest of your lives. Now, when you do that, when you show more examples, you see everything about life is about narratives. It's a game of narratives. If you are able to show that and you are able to contribute and demonstrate more companies in such light, we are able to create 20, 30, 40, 50, 100 successful companies like that. Then you would realize that a lot more youth will tend to go that way. No, so if you take a look at the youth today, and I've seen a lot of videos, particularly for the NSAS. Everybody, the majority of the youth, they talk about the fact that, oh, we cannot hold public office except you have a godfather. Yes, that may be true. But in actual fact, why do you really want to hold public office? People want to hold public office because in truth, they realize that that's the easiest way to make money in Nigeria. But that shouldn't be so, ordinarily speaking. We need to create a narrative that if you are in business, you can be very rich, you can be very successful, and you can be very significant. And this is why I say government needs to ensure that, first of all, we create transparency in a manner that allows people to start anything and be able to grow it and be able to create value from it and also be able to draw value from it. I think that's the most important thing. Then we can now begin to unpack that and take a look at how this affects even our communications. Look at it. Let's take a look at Nollywood. What are the narratives? Because Nollywood is fast becoming the face of Nigeria all over the world. What narratives do we paint in Nollywood? We need to encourage Nollywood to begin to paint narratives of people who are capable of starting small businesses and growing it and making it big and making it significant. We need to go back to schools. When we were younger, we used to have moral instructions. When we were in primary school, when we were in secondary school, we used to have subjects like civics that teach us about citizenship, that teach us about how to be responsible. These things have disappeared. And I say that there's no society that can ever succeed without having a single value system. And I said this is one of the biggest challenges in Nigeria. There is no value that galvanizes Nigeria together. So it is easy for people to separate us on the basis of religion, on the basis of ethnicity, and so on and so forth. But what makes us Nigerians? These are the kind of things that we should go back to. And when we understand what makes us Nigerians, when we understand that actually you can be very successful by being very creative, by being very tenacious, and being very focused on creating value, then I guarantee that we can have a very, very good society. We can have a society that we can all be proud of. And mark my words, look, it's never too late at all. It doesn't matter where we are. Actually, there are two sides of every coin. We can look at where we are and say, oh, we are very far behind. But I also say that we can also look at where we are and say that we have a good headroom for growth and development. I choose to look at it from that standpoint. We have a lot of headroom for growth and development.
Now, you just talked about the fact that it's never too late. I mean, that's quite interesting. What about education? What role does education have to play in all of this?
Oh, yes. You know, I actually said that just now. But if you take a look at the entire value system, we have to go back to the schools. And I'm talking about schools from kindergarten. Every Nigerian child needs to know that you are Nigeria and that Nigeria cares about you and that Nigeria is investing in you and that Nigeria will defend and support you. Now, this is important. Take a look at Americans. A number of times they don't even understand what they're talking about, but they are very gregarious people. And one of the things they say we are Americans. What does that mean? Why are we unable to say we are Nigerians? So these are the things we need to do. Now, that's important. I'm saying that that's social. but the social aspect is very important. Then we now need to go and look very carefully at the curriculum. What kind of courses are we encouraging in our schools? Are we still looking at courses that are not necessarily going to create value for us? If we are still investing in such courses, then we are missing the way. I want to say that we need to look at those curricula and ensure that we create courses that can generate value. Thank you, Bisi.
Would like to thank you, immediate past president of the Institute of Software Practitioners of Nigeria, Dr. Yele Okeremi. Thank you for speaking with us on the program.
You're welcome.
Our commodities market update will be up next when we return in just a moment. Please stay with us. Welcome back. Let's now switch to the commodities market, and the research analyst at the financial derivatives company, Nosike Nwajide, joins us now to talk us through this morning's burning economic issues. Good morning, Nosike. Thank you for joining us on the program. For a third week running now, the EndSARS protest has continued across the country, disrupting movement and affecting businesses. Can we even quantify how much has been lost since the protests began?
I don't think, first of all, good morning. Thank you for having me. I don't think at the moment we can put a number or an estimate as to how much is being or has been lost at the moment. Some people would argue that regardless of whatever inconvenience or hardship that people on the roads or business people face, that they'll consider it fair given what people have lost and what has driven people to come out to protest in the first place. I think the major issue right now is logistics, getting from the sources of, especially traders getting their goods from the markets in the rural, from their sources in the rural areas to urban centers like Lagos and Abuja. The food prices will probably rise in the coming days, not even weeks. Logistics costs, given that roads have been blocked, we hear that airlines have increased their fares because of increased demand. People cannot travel via roads, so they resort to traveling by air, basically. So if you have roadblocks, you have increased logistics costs. Some people may not be able to get raw materials, so they may not be even able to produce at all. Then you have people unable to get to work. So there's reduced productivity and higher prices. Those are the things that we feel at this moment. But we can't really put a number as to how much is being lost. But we can tell that at the end, the estimate may be on the high side.
Now, just like you mentioned, of course, the protests are disrupting the commodity supply chain. And take, for instance, in Edo State now, there's been a 24-hour curfew imposed due to the violence that erupted there yesterday. But how will issues like this continue to affect the supply of commodities, even as we speak? Where are we in terms of commodity prices?
Okay, for Edo State, you think of what commodities do we readily get from Edo? I mean, if there's no movement in Edo State, you can get plantain is one of the major suppliers of plantain. There's palm oil as well. So we imagine that, okay, you take off the supply from Edo State. So where else can we get these commodities from? Obviously, the supply will be inadequate, so prices will rise. And the commodity space in general, given that most of us, those of us who live in the urban centers will be unable to get, or the demand in the urban centers will overwhelm supply. So prices will rise. Prices of commodities in general, not just the main ones. Even, I mean, as long as logistics costs have risen, we expect a rise in commodities prices. And the fact that the demand at the moment will overwhelm supply, that's an extra factor to contend with. In general, commodity prices will rise. Demand is on the high side, while supply is limited. So on the whole, commodity prices will rise, and they might remain high, given that prices are sticky downwards in this part of the world.
And let's not forget now that the economy was just opening up after several months of lockdown due to the COVID-19 pandemic. So how do you see this impacting the economy, which is already headed towards the recession anyway?
The impact, like I said, the impact, we'll not be able to estimate the impact until the protests are over and companies take stock. But obviously, our recovery itself was already fragile. We saw the IMF revise the growth projection for 2020 to something more positive. But given this given this event, given the events of the past 13 days, and given that it's mainly in the urban centers like Lagos and Abuja and Port Harcourt, and given that it's in some places it's turned violent, given that some people are saying that the military is likely to intervene, there might be, we hope not, but I mean the case of the scenario of the 24 hours lockdown in Edo being brought to Lagos or other places like Abuja would impair output severely. And whatever numbers we had as a forecast for 2020 or for Q4 GDP would be revised downwards. And obviously our growth, the fragile recovery that we were on a path of fragile recovery, that would be obviously less than fragile, so to speak. So it would greatly impair our recovery prospects as it is.
Now, just before we wrap up this conversation, Nosike, let's just touch on the latest developments in the crude oil markets. Now, of course, we've seen prices trade around $42 per barrel as at this morning, and this is just as Nigeria's oil output is also down 0.68% in September. Can you talk us through these developments in about a minute?
Okay, so OPEC Plus met last night. At the end, markets were hoping that they'd give some sort of direction or make some decision as to what they would do with oil output by January. The plan is to further cut down on outputs, or lower the output curves. They had output curves that currently they produce about 7.7 million barrels a day. They want to lower it down to about 5.8, and the plan is to do that by January, by Q1 next year. But given that the demand picture is beginning to weaken, given that there's a resurgence in the coronavirus, given that the US, for instance, the stimulus bill that was expected to have been passed by now, which would boost consumption or boost the amount of money that Americans have to spend, given that America is the biggest consumer of oil, that there's still a lot of speculation and uncertainty as to that. So the demand picture is not looking as bright as it was a couple of months ago. And the supply picture is beginning to, there's a glut in the markets right now. Libya, that was producing next to nothing some months ago, is increasing its supply, and OPEC members who are struggling financially are hoping to increase their supply by January. So OPEC had this meeting and gave no signs as to the fact that as to what they would do in January, but by December the 1st, they would meet and take a decision. Okay. Right now, we expect them to comply with, give it to quotas. Nigeria is expected to even cut down its production to 1.4 beyond quota 1.41 million barrels a day in the coming months.
All right, Nosike, thank you. Nosike Nwajide is a research analyst at the Financial Derivatives Company. Let's just touch a bit more about oil prices. Earlier on, we told you that prices are down for a fourth straight day today, and that comes as worries about the resurgence of coronavirus cases globally continues to stifle recovery in fuel demand. Brent crude futures were down 0.47% to $42.42 a barrel in early trade, while US WTI crude futures were down 0.17% to $40.76 a barrel. Meanwhile, Libya is rapidly ramping up production after armed conflict shut almost all of the country's output in January. And industry sources say that output from the biggest field, Charara, which reopened on October the 11th, is now at around 150,000 barrels per day, which is about half of its capacity. Data extraction is moving from being done in the background to a primary activity in its own right, generating significant income for exchanges in traditional markets and, in some cases, the majority of profits. In view of this, the Nigerian Stock Exchange is set to host the 2020 edition of the NSC Market Data Workshop to facilitate discussions on the significant impact of shocks such as the global financial crisis and COVID-19 on the capital market. The head Market Services Department at the Nigerian Stock Exchange, Femi Balogun, joins us now to talk more about the Market Data Workshop and its benefits for the Nigerian capital markets. Good morning, Mr. Balogun. Thank you for joining us on the program. Now, market data is today gaining increasing importance in the global financial market. How pervasive would you say the use of market data is in the Nigerian capital market?
It is getting better than before. I'll say it's better than 6 years ago. It's better than 5 years ago. but it's not as pervasive as when it comes to international market. And that's the reason why you see that the Nigerian capital market tend to be a little bit slow when they're reacting to activities in the market. And that is the essence of what we're trying to achieve here.
Now, how do you think the Nigerian capital market can catch up with other emerging and developed markets in the use of market data?
It is moving in that direction, because if you look at most of the investment houses, they have researchers in there, and the researchers have a little bit of more quantitative skills than many years ago. And because they tend to be able to extract information from the data itself. So it's moving in that direction. And I tell you, if you go to most banks, if you go to most brokers that we have, the dealing members, you will see that they have research arms, that they have quantitative guys in there. So it's moving in that direction. But at the exchange, we need to do a little bit more on our side. And that is essence of us having this workshop on a yearly basis, where we bring the participant in and have a discussion about it.
Now, of course, I want us to get more into the workshop. Now, of course, this is the 5th edition. That's talking about the upcoming 2020 Market Data Workshop. It's scheduled to hold on October the 23rd. Of course, we know that this is in line with the exchange's commitment to promoting the importance of market data. But what more can you tell us about the workshop?
What I can tell you about the workshop is you will have expertise, guys that actually deals with this data itself. Then you will have the people that make decisions from this data and from the outcome of what these guys that actually do what they do with this data itself. So the essence of this workshop, what we're trying to get at is pretty much simple, is when you, like what happened in this pandemic now, it changes a lot of stuff from the quant world. They can tell you that. They have a research by some guys in Nasarawa State University that they did on COVID-19. And basically what they were saying is that they have changed the model that they use, that the parameters that we used previously needs to change. And that's the essence of it. We, even at the exchange, we conducted some exercises ourselves where we look at the activities in the market to determine what actually is going on within our traders. So those are the things that we try to elaborate when it comes to this market data.
Now, the exchange recently released an upgrade to X data portal to promote access to real-time, historical and delayed market data. What value does the portal bring to various users in the capital market?
Fantastic value, to be honest with you. It makes it, you have to look at it as, how do we even get oil into our car? It is drilling. The guys that drill it have access. The oil is in the ground, it's there, but they have to use those drilling techniques to get oil out. And that's exactly what X Data Portal is doing. It is giving access to those that need it to make it a lot easier. Because the thing is, if you want to get someone to use something and it takes them time and it's very difficult for them to get it in real time, then they can't even use it. So the essence of the X Data Portal is to give that access to this market data we're talking about.
Head Market Services Department at the Nigerian Stock Exchange, Femi Balogun, thank you for joining us on this program. Thank you.
Thank you very much for having me. I really appreciate it.
All right, now let's get a review of Monday's trading activities at the Nigerian stock market with Eddie Young-Ewan. Good morning, Eddie.
Good morning, BC. Well, yesterday there was a tussle between the bulls and the bears in the market. Initially, in early trading, the bears had a hold of the market, and towards the end of trading, we saw some of the bulls in the market. But unfortunately, at the sound of the closing gong, the market closed flat, as the index was unchanged at 28,658.31 points, while the equity cap was at 14.979 trillion naira. Now, activity chart was lower yesterday compared to Friday's session. Volume was down by about 41%, value was down by about 28%, and all of that was traded in 5,132 deals. You can see the sector chart was mostly negative, but the banking index declined, industrial goods declined, while consumer goods, insurance, and oil and gas declined. But let's talk to Phil Anegbe, a research analyst at Cardinal Stone Securities, for more. Good morning, Mr. Anegbe. Thank you for joining us on the program.
Yeah, good morning. Thank you, Edison.
The market seems to be towing the line of sentiments that we saw last week as the index closed unchanged yesterday. Now, what does this say about the trading week ahead? What should we be expecting?
I think we should expect largely more of the same in the week ahead. I think for yesterday there were some opposing forces, particularly in the banking space, where we saw strong institutional demand for GT and sell-offs in a number of other tier one stocks like Zenith. Consumer goods, we did see strong bids for Nestle, even though we didn't have enough matching offers. So broadly, we expect sentiments for this week to be dictated by profit taking, especially on sectors where we've seen significant rally. You would agree with me that last week we did see significant rally in the banking space, and already we are seeing some profit taking in some names. And then you expect reactions to earnings releases. UCAP released its results yesterday. It was really very good. So you may see some reactions to that as well. And then Mobile also in its meeting of shareholders that approved the listing, right? We know that at the first announcement, there were a lot of reactions to the first announcement. That's before now. So you may not see so much of a reaction, but I think a lot will be shaped by the release of the actual terms of the delisting. So that may also provide some sort of directions for markets. So overall, we expect broadly mixed sentiment in the market, dictated by these three factors.
Speaking about profit taking, would you say this is a time for short-term investors to take position in the market, or is the market filled with long-term investors right now?
Well, we are seeing a mix of both. Like I said, domestic individuals who are retailers and even some institutions are actually playing short or tactical for now. A number of them taking profits on names that have rallied. It more or less speaks to the cautious undertone that we've been seeing for most of this year. We know that markets reacted positively to the MPC announcement when they actually reduced MPR. But then people are still a bit cautious given the overall macro concerns. Recession is just a quarter GDP away. So all of that actually coming to actually shape sentiment. But broadly, you expect this profit to continue. A number of people still playing short, while the few long-term fundamental investors still look to take advantage of fundamentally sound names.
So with rates in the fixed income markets, dropping to new lows, we've seen rates at the Treasury bills market at 0.5 or 0.7%. How soon should we be expecting an influx of investors in the equity space, since yields in that space are more favorable than yields in the fixed income market right now?
Well, lower yields, of course, spurring a lot of reactions, a lot of flights to equity. And add to that, the significant maturities we've been seeing. We expect that these maturities will remain robust for October. Then you see some sort of moderation from November onwards. So you may not see that kind of yield-driven flight from November onwards because liquidity will be thinner relative to what we are seeing now. So we expect most of those gains or most of those kind of reactions to be more in the current month, given the dynamics of expected maturity.
What are the opening calls in the market like this morning?
Well, in the market, you still see, like I said, you still see an extension of similar sentiments that we saw yesterday. And it's not a surprise, given the cautious macro environment that we're living in and given the whole liquidity story. So you expect people it was expected that people will take some profit. An example is WAPCO. We did see significant rally in WAPCO leading up to yesterday. So the profit taking was expected, and it's a similar case for a number of the banking sectors. So our market has basically extended those kind of sentiments, and you may likely see that play out. Are these likely to be impacted by one or two bargain on in a few names as well? So it's going to be broadly mixed in our view.
All right, Mr. Anigbe, thank you for your input on the program. Phil Anigbe is a research analyst at Cardinal Stone Securities. We'll have to leave it at the markets for now. Over to you, BC.
Thank you, Eddie. Of course, we'll be coming back to you shortly to talk us through the debt and currencies market, but that will be right after we make a stop in London to see what headlines are trending this morning. Please stay with us. Now let's bring in Juliana Olayinka from our London studio to analyse this morning's major business headlines. Good morning, Juliana. Well, the first UK airport coronavirus testing begins today. How's that playing out this morning?
So far so good. We've had the Heathrow boss on British media really happy that finally this system has been put in. I think Heathrow bosses and airline bosses in Britain have been calling for a quick, fast test system which can get people not self-isolating but enjoying their holidays. So it's really been hailed as a good success for how we are going to live with travelling and COVID-19 in the near future. I think last month, the Transport Secretary, Grant Shapps, did put together a task force to try and see how Britain can start opening up its borders. I believe at the moment we only have 4 quarantine-free travel corridors: Germany, Gibraltar, Greece, and the other one is Sweden. So from today, if you can afford to pay £80 and you're travelling to Italy or Hong Kong, you go to the airport, you have to book in advance, and you can take a test. And within an hour, it will tell you whether or not you're positive or negative. If you are negative, then Italy and Hong Kong are accepting these test results, and you can have your holiday and enjoy it. I know that the British government are in talks with the US government because they're really trying to improve the connectivity between those two places. But, you know, it's been a long time coming. We know that COVID is going to be living with us for some time now. So it's definitely seen as a first step to start opening up those travel corridors.
Now, let's take some company news, and that's talking about UBS, which has reported its best third quarter for a decade with a 99% hike in net profits. What's happening to this stock this morning?
Well, yes, it's good. It appears as if, you know, if you're in the wealth management business, you're going to be incredibly wealthy. But UBS, the world's wealthiest, world's largest wealth management bank, actually isn't obviously listed on the FTSE 100 here in London. It's listed on the New York Stock Exchange. And I believe the SIX Swiss Exchange had a look at their data this morning. It appears shares are up by about 2.5%. And that's because, of course, 99% revenue increase is absolutely phenomenal in Q3, particularly as, of course, if you are in retail banking, then you would have suffered. Of course, you are still making profits, as all the big banks are, but impairment charges as well as historically low interest rates has kept banking profitability pretty much down, but UBS has obviously gone over and above that, and that's because they've really been focused on their wealth management division. For the 3 months to September this year, I believe their revenue was over $2.5 billion. If you compare that to this period last year, it was just above $1 billion. So it's absolutely phenomenal. And it'd be interesting to see just how this shakes up the New York Stock Exchange when their bell first rings in a couple of hours' time. But as I said, on the SIX Swiss Exchange, their shares are rocketing this morning.
Finally, Juliana, the government has vowed to keep a lid on the energy bills of 15 million homes until at least the end of next year, after agreeing to extend the energy price cap beyond 2020. Are you one of the beneficiaries of this, Juliana?
Well, I hope so. When you've got 3 children, you do use a lot of gas and electricity. But, you know, it was a very successful period for them doing this last year. I believe it saved customers about £1 billion, between £75 to £100 per home. Alok Sharma, the business secretary, said it's important and vital that this continues well into next year. And that's really because, of course, coronavirus, it's hanging around much longer than a lot of experts thought, and is likely to hang around much later into next year. Ofgem, the energy regulator, is also pretty happy with the government's announcement, and they welcome this. And that's really because, especially here in Britain, the energy and gas supply and industry is very, very competitive. And you've got a lot of big companies making a lot of money. And usually it's off a lot of vulnerable individuals who rely, of course, on their heat, as we all do. But the government has said that because of the success of the legislation and the scheme last year, it will continue on to 2021.
Thank you, Juliana. We'll see you again in the afternoon.
Thank you.
And it's back to Edidiong for a review of the debt and currencies market. Over to you.
Thank you, BC. Just before we go to the fixed income market, the unlisted securities market started the week negative yesterday, although marginally by 0.02% at 716.77 points, while the market cap was at 526.52 billion naira. We saw just about 10,943 units worth 185,000 naira traded in 5 deals. Now, the fixed income market, the bond market rallied on strong system liquidity, with average yields declining by about 26 basis points to about 4%. We saw yields decline at the short, mid, and long end of the curve. We had 49 deals worth 29.63 billion naira. The Nigerian Treasury bills market was a bit quiet yesterday, although it was bullish as yields declined by about 34 basis points on average to 0.8%. So as we can see, yield in the Treasury bills market has dropped to the zeros, as we had just 0.65% and 0.65% on both maturities. There were 2 deals worth 620.85 million naira. The bond market was also a bit quiet yesterday, but it was bullish as yields declined by about 11 basis points to 1.11%. And buying interest was seen across the short and mid-term maturities, while the long end of the curve remained flat. We saw yields fall by about 5 and 26 basis points at the short and the long end of the curve, while the long maturities were unchanged at 2.42%. We had 4 deals worth 5.00 billion naira on that counter. Ramat Baba, the chief dealer. Okay, here Ramat is not ready now. So there's a primary market auction soon where the DMO will be offering about 15 billion naira on 2 maturities. So today, investors will be focusing on that. So we may not see much activity at the OMO and the Treasury bills market space, as investors will just be paying attention to that. And then after that, we will now see how investors react to that. Ramat Baba, the chief dealer of fixed income at FBN Quest Merchant Bank, joins us now. Good morning, Ramat. Thank you for joining us on the program.
Good morning. Nice to be here.
Should we expect the bullish momentum in the bond market to continue, even though we're going to be seeing limited bond offers for the rest of the year?
So the limited supply on bonds is actually part of the reason why the bullish sentiment has continued into this week. When the DMO released the offer circular last week, Thursday, we saw a lot of demand coming into the market. In fact, more demand coming into the market because the DMO took off some maturities. So right now we have just 2 maturities at the auction, and of course, as a result of that, the maturities that are not on offer are really being sought after. As a result, we've seen yields going further, and we actually expect that to continue bearing any other unforeseen circumstances.
Okay, so speaking of the DMO bond calendar, now how will that shape trading today ahead of the primary market auction?
We've seen demand has continued to come into the market. We don't expect that to change, like I said, unless there is a major event changing the current situation. So we're seeing demand coming into the market. Offers are currently very scarce in the market. We're seeing more bids. Actually, almost everybody is all bid. Though, of course, at the same time, we've noticed that there's some sentiment around the current levels of the yields in the market. So we've seen a few people staying on the sideline, or people just taking positions and exiting it. A few people are really not buying to hold for long tenors. That's for those just chasing profit on their transactions, really.
All right, Ramat, thank you for your input on the program. Ramat Baba is the chief dealer for fixed income at FBN Quest Merchant Bank. We'll have to leave it on the market and hope for a positive trading day today, BC.
As usual, Eddie Young, let's see what direction the market swings at the end of the day. Thank you. And that's where we wrap up today's program. Thank you for watching. I'm BC Adebayo.